Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey everyone, welcome to Stocks Number Trading. Thanks everyone for joining. My name is Ron, my partner is Dave, and it is 6:30 p.m. It is Wednesday, January 7, 2026. Thanks everyone for joining. We're going to go for a good 2 hours tonight. We're going to go over today's top news and then get into the charts where we're going to look at gold, XAUUSD from top-down analysis from the daily, and we'll bring it down, and I'll answer any questions that you guys have. And I also want to just do a quick little 5-minute review. If anyone traded US 30 Dow Jones at market open at 9:30 a.m. when Wall Street market opened this morning, there was a good setup, and I hope maybe you guys either caught it or I'll review it with you guys. And the better we get at pattern recognition, then the more we'll learn. But it was a good sell setup this morning. The way how the market moved, grabbed liquidity. If you waited for that first 5-minute bar to close, found a point of control, you could have sold down with it. Okay, so I hope everyone's having a great day, and we're going to get started. Thanks everyone for joining. I appreciate everyone. So first things first, let's just go into before we get into the news, I just want to talk about last night's session real quick. It was right over here. If you guys remember, we broke it down and got into this little buy right here. It came up to the yellow line, secured 80% of the position while moving stop loss to break even. And I had 20% running. The 20% runner came to hit break even. But remember down here where I had the line of this red wick right here. You see this candle, we talked about it yesterday at 10:35 a.m. Eastern, and I said, that's where I placed that red line. And remember, right below it, I caught that point of control of that big bullish candle that started the big move the previous day. And you see how I drew that box right across? And after the call, that's the importance of setting alerts at these critical areas. Because you can see here, just before it went into 9 p.m., you can see how the move came right into there, tapped into that box, and look at the move coming out of there, and look at where it came right up to, right back up to that red line that we had identified. That's the kind of move I was looking for on that original buy, but you see how it came down, grabbed more volume, grabbed more liquidity, came back up, but could not break that resistance right there, and then sold back down. And you can see how you can trade off of these levels until you get a big confirmation bar. And had you cut that one in half, you can see again when it came down to another yellow line. These yellow lines are daily points of interest. That's why I place alerts and signals at all of these locations throughout the day. And I trade off of these all day, all night, 24 hours a day, around the clock, 5 days a week. And you can either look for if you're buying a counter trade, are you moving with the trend? Did you get some real good selling volume to continue push down? And then you can see how you can trade off of these levels throughout the day. Here it came again and tapped right into that daily point of interest, and so on and so forth. And you can look for good quality setups. Like look how it came down to the yellow line, bounce off buy. Again, it broke down below here, but came back engulfing. There's your liquidity grab, your confirmation, there's your ignited bar, and there's your continuation. And you can see how these are static levels, these yellow lines. And this is how it's trading up till like right now. You can see near the close of the day, how it continued to bounce off of these daily points of interest. So once we learn how to do a good top-down analysis, this is all you got to kind of do throughout your trading, okay? I'm going to start with a fresh chart, obviously, so we can go through everything. But before we get into the charts, I also just want to talk quickly about this move right here. So if you guys were trading Dow Jones at Wall Street market open, here it is. So you can see the type of moves. You're getting thin volume, continue push up. Here's the move prior to Wall Street. You see 9 a.m., then 9:05. There's 10 after 9, 9:15, 9:20. The volume now gets a little bit larger, 9:25. There was the big push right when the market opened. It popped the wick. It's a nice buy quickly, but to pip and dip, and that created a new all-time high. And if you waited for the full 5-minute bar to close, you see how it came down. Big bearish engulfing bar, closed below the structure. You can go back and you can see the highest structure right there where it created this double top right over here. And this was from Europe. If you look at the time, this was from midnight going into Europe. You can see there's the big volume-based candles at 4 a.m. And then you can see how they kind of spiked the liquidity in New York. I know if you got into a buy, and you held, then it came right back down. So again, what we say is have a rule, have a plan, whether you're waiting for the first 5-minute bar to close, whatever it is. If you waited patiently, you saw it's a big bearish engulfing bar. And then first thing you can do is cut it in half right there. You can find quickly the point of control of that big body candle. Look at it compared to the other sized candles. And you know that this is a significant one because this is representing Wall Street, the first 5 minutes. There's the bearish point of control. How we normally do, stretch it into the future. And if you're waiting, look at how the next bar comes up, blue, big buy, big buy. Did it come up to the point of interest where the market opened? Did it continue to fill the wick? No, it's a lower high, and they pushed it back down. Look at where it closed, back below that bearish point of control. Next bar again, opened blue. Look, it couldn't break through the point of control red box, got rejected, lower high, continue come down, and look, it engulfed. Next bar again, blue, blue, blue. As soon as it got rejected, right there. This is where I had to sell myself after this bar earlier this morning. And I went into the sell and I placed my stop loss above the point of control zone, and I didn't get the full entire move all the way down, but I got significant move where I made my daily goal right off of that. And you can see when you get the volume in New York, these big body base candles, like that candle is 70 pips. Continuation is 90. And if you continue to go down, I was down into here, I hit my daily goal, right? And I took 80% and I leave 20% running. Did anybody catch this move earlier today? You can see it's 9:30, 9:35, 9:40, and then I took the move at 9:45 on that next 15-minute candle. Did anybody take this, or I was the only one trading US 30 this morning? Because if you didn't, no worries. But please, yeah, you caught 100 points, Shay, amazing. Just look at this pattern, guys. This is what you got to recognize, because you're going to see this maybe not tomorrow on Wall Street, but maybe the next day. You might see the same move next week in Wall Street. You might see this with a different security, but understand why they did this move. So that's why sometimes when you just buy right off when a candle opens and you don't know what you're doing, then this can happen. So the best case scenario is wait for a body to close, and that's how you can go about trading. Okay, guys? So when we get back into New York, we're going to be focusing on US 30 and NASDAQ and things like that, okay? Today's news, we had some news coming out of US. We had the JOLTS job openings. They came in, you can see below the forecast. There was a revised previous month, but still disappointing numbers in the job openings. ISM Services PMI was pretty good. It came out green above the 52.2. Actually 54.4, which is the U.S. Services PMI. So this is good. You can read on here as to what it is if you want to read more, further educate on the articles. Economic activity in the services sector continued to expand in December. That could be services sector. Month of December is holiday season, Christmas shopping and all of that. That could be typically why you see these type of results in the month. So you also got to know seasonality in trading. Like right now we're trading in January. It's in the new year. It's right after the big holiday season, a lot of spending. So maybe now consumers are getting a little tight with their money because they blew it all on their kids on Christmas presents and things like that. So you also got to go with seasonality when you're trading. We know that the summer months, June, July, and August are traditionally thinner volume because it is the summer and things start to pick up September, October, November, and then going into the end of the year. Now we're starting again a new cycle of seasonality. So January, February, March. And so just think about the way how consumers spend money, what months and things like that. And that can also give you a different perspective of consumer spending, okay? We also had our big crude oil inventories this morning. As you guys know, there's developing news going on in Venezuela right now with the oil tankers and Russia and everything. It's a crazy, crazy, crazy world we're living in right now. And as traders, I always look at it as it's the greatest time to learn and be trading because there's lots of volume in the markets. There's a lot of volatility. If you know what you're doing, you can maybe hit a daily goal, get in and out of these markets like a sniper. Just get in, get out, pip and dip, and let's continue to do this on a daily basis. So if you're learning right now, it's good time to learn, obviously, but the markets are pretty volatile. So just please proper risk management because you can see how large some candles can get on the lower time frames. 5-minute candles can be 100 pips or more. So, and if you're over leveraged, you can see you could do a lot of damage to your account. Okay. And then looking forward into tomorrow, there is some news. Our weekly unemployment claims will be released tomorrow in 8:30. You got COMEX market open and not much news going on after that. Okay. Earnings. We had some earnings in the after hours. We had this STZ over here, Constellation Brands. We talked about this security yesterday. These are they have Corona beer, cerveza over here, and they got their hands in a little bit of the cannabis sector as well. Earnings per share came out very positive. They exceeded their revenue. Growth was not good. Surprise, and guidance was kind of mixed over here. So that was our earnings that we had in the after hours. Tomorrow morning in the pre-market, we have TD SYNNEX, Acuity Brands, Commercial Metals Company, in Neogen Corp and Helen of the Troy. So there's not big name corporations reporting in the pre-market tomorrow. I don't think these are going to really move the S&P or NASDAQ or Dow considerably with these names. Okay, so I wouldn't pay too much attention to tomorrow's pre-market earnings. Today's news, we have these two clowns over here. This is the Prime Minister of Canada, Carney, and this is the President of America, Mr. Donald Trump. These two, in my opinion, are clowns, but also in Canada, we've got a clown representing us as well over here. But it is what it is. This is what we got to go with. This is the best we got. Okay. Sometimes we got to scrape the bottom of the barrel of our politicians, unfortunately, over here. Maybe one day it's going to get a little bit better over here in Canada and maybe the US as well. But lots going on around the markets. Crude oil falls as US deepens involvement in Venezuelan oil sector. What else we got? Copper slumps from record as rapid rally fuels profit taking. So remember, good things don't always go up forever. Gold is going to sell off. NASDAQ is going to sell off from all-time highs. US 30 is going to sell off. Copper, silver is going to sell off. Whatever. NVIDIA is going to eventually sell off. Why? Because there's going to be rapid fueling of profit taking. So everyone that's in the money, including yourself if you're trading, but also think about the institutions, the big banks, the big corporations, the big financial big wigs in the market. They could be up billions and billions and billions of profit, and maybe they want to start taking partials. Maybe they want to start closing long positions. Maybe they're opening up short positions while they're taking their money. So you always got to consider that. Like, good things don't always go up forever. There's going to be times where the markets go down. It's not a market crash. It could be just a corrective phase, but you'll see that some type of securities go through this phase. And you got to be able to recognize this, because now we could be looking for selling opportunities in the market, right? So copper slumps. What else we got going on over here? Bitcoin faithful still missing. Even token reclaims 90,000. So Bitcoin is still consolidating from 80 to 95,000 right now. It's trying to get up to that 100,000 psychological level, but it's not there yet. So it might further have some move to the downside until we establish a solid supporting area and where it finds its mark and continue to go higher. Okay. So that's what we got going on in the news right now. And in our Discord, thanks everyone for joining our Discord signals. We shorted gold earlier this morning. You can see kind of 6, 7, 8 a.m. over here before COMEX. So we had this set up. We were looking for sells below psychological level 4,460. And we can see it coming down, lower highs from here, lower highs, continuing to push down, but couldn't really break 4,460. Finally, we get the break right there. Cut that body in half, push down. If you missed it, again, look at the retest opportunity. You could have got in a sell on the retest, place your stop loss above there, and you see you realize zero drawdown, straight into the money. And it pushed down. Again, when it comes up on that corrective, the bounce, right? And it's still trending down. So that's your counter trade. Did your counter trade close above body to body, above this point of interest on the 5 minutes? No, it continued to get engulfed. There's your big bearish engulfing bar, continue close below, cut that bar in half. You could have got an additional added onto another sell. So that's what we're trying to teach you guys. When you get the correct trade direction and you're in the profit, maybe start to learn, if you haven't already, to add another position on a profitable trade. You can kind of milk the trend by adding positions. Then you could really, really aim to hit your daily goal. All you need is to catch one solid trend and you could add positions onto it. We as traders, we have no problem adding positions to losing trades, but we have problems psychologically adding positions to winning trades. Raise your hand if that's you. Sometimes that's me over here too. I had a problem when I was learning to trade. I had no problem adding to losing trades. It was very easy. I don't know why. Psychologically, this is what we're talking about in our webinars right now, is why as human beings do we add no problem without even thinking about it to losing positions. And when those losing positions keep going down further, we put ourselves in further drawdown and we put ourselves in maybe possibly blowing up an evaluation. Maybe guys, we're all guilty of it. I know you are, and I am too. Because if you think I'm reading your mind, I go through this myself, so I know how it is. It took me years to change my mindset, and I was thinking about it for 1 week straight, where why do I have no problem adding to losing positions, but when I get in winning positions, I can't add positions? So I told myself, I'm going to flip the script. I'm going to change it. I'm going to reverse this psychology. It's kind of what we talk about reverse engineering. You see how we have to reverse engineer our mindset? So I told myself the next week, I'm not going to add on losing trades. I'm going to close losing trades. And what I'm going to do is when I get into profitable trades, I'm going to add. I wrote it on big sticky notes on my monitor, and I said, let me try this for 1 week. I got nothing left to lose. You know, what's the worst that can happen? Okay, then I have another losing week. I got to learn from it. But believe me, guys, when I learned that, it changed my life. It changed the way how I looked at trading. So if we can all change our mindset, guys, that's why over here on our website, we're doing this mindset. I just finished recording the second edition. So we talk about fear, greed, and hope in prayer trading. So this is what we're going to talk about. These are the things I talk about in those type of sessions that we do over here with the education. But guys, write this down, please, or just let's try tomorrow to close losing trades, okay? Trying not to add positions onto losing trades. Try and listen to me and add winning positions. If you get into a solid trade and you're trading with the trend, add to that position. You can also wait for pullbacks, like you can wait for that counter move and you can sell back down. You're selling with the next leg down. You're selling with the higher time frame volume. You're selling with the next move down, okay? And just back test it. Just try demo trading for a week, demo trade it tomorrow, and then review. You might see that you might physically this week, by us talking about it, you might change your mindset. So try that. Yeah, it's Tom Hogarth style, you know? So Tom Hogarth, guys, if you don't know, is a really old school trader. He's all about psychology. I have my utmost respect for him. He's more of a psychological trader. So I became a psychological trader myself. I was all about technicals and price action too. But when I started to incorporate fixing my mindset, fixing my psychology, I took my trading personally to another level. And I hope you guys can too. So try that tomorrow and then we'll talk about it. Maybe you might have a fantastic day. So listen, cut your losses. Do not add to losing positions. Rule number 1. Rule number 2 is add on to profitable positions. Because if you're seeing that you got a good success rate on profitable positions, when you add multiple trades, you're basically milking the move 2 to 3 times, right? So that's what you got to do, okay? And then the way how I kind of figure out the moves is with feeler trades. I use feeler trades until I establish what the move is, and then that's when I go in, right? So that's maybe, hopefully you guys can learn that method of trading as well, okay? So that was a setup we sent out to the group on gold, and it was a fantastic opportunity to grab some pips there. And we send those out daily. Okay, guys? Here's our website. If you guys want to join, lots of education over here. Like I said, we're going to take the education to another level this year. We're just getting started. Next week, what I'm going to do for Tokyo sessions, Monday, Tuesday, Wednesday, Thursday next week, is going to be live education with you guys. I want you guys to see those 4 days as to how I'm going to do the live education, and I want your feedback, guys, because then I'm going to start maybe the free SST Trading Academy for maybe 1 month or 2 months, and then we'll go more into advanced concepts, okay? So, but I want to get your feedback from it. So we won't be like live trading. I want you guys to learn. I want you guys to learn a lot, okay? This is our schedule for all of our live sessions. Dave does the New Yorks. I'm doing the Tokyos with you guys. And don't forget, Snipers in Zoom. Friday, I'm uploading that webinar on understanding the role of emotions in trading, how to conquer fear, greed, and hope in the markets. We'll talk all about that, okay? I'm a big proponent on mindset and psychology. And I know that that's what basically changed the game for me, was when I started to really clean up my psychology and mindset, okay? And guys, free blogs are all available. Remember yesterday we talked about our 26 stock sniper trading goals. I hope you guys have some goals set for this year and you guys are adhering to those goals, because this is going to be a big year in the markets. You already see the first week of January, how crazy it's already started, and this is only the first week. So it's going to get intense, guys. We could see further escalation around the world, right? I want peace around the world, but you know, I'm a realist and I see what's going on, and there's a lot of stuff going on around the world right now. So it could get volatile, and we got to know what we're doing as traders, okay? Please read this blog if you guys can, tomorrow or later tonight. The top 10 countries by oil reserves. Number 1 is Venezuela, and that's in the news right now. So why is Venezuela? Read this article, you'll learn a lot. So Venezuela has 303 billion barrels, proven oil reserves of $21 trillion. It's the largest in the world, mostly heavy crude that's expensive to produce and refine. So we can talk all about Venezuela. What makes Venezuela number 1? Again, it's got the largest proven oil reserves in the world, bigger than Saudi Arabia's. Most of the oil sits in the Orinoco Belt, a massive deposit. What's the downside? Much of Venezuela's oil is heavy or extra heavy crude, kind of like what we have here in Canada. It's kind of more of a tar because it comes from sand. It's thick, dense oil that's difficult and expensive to extract, requires more refining. Why production is low despite huge reserves? The years of the economic collapse, poor maintenance, and sanctions have damaged production infrastructure. Many oil fields, pipelines, and refineries are old or non-functional. What this means, Venezuela is like someone who owns the world's biggest gold mine, but can only dig with a spoon. So that's kind of the analogy. You got the world's biggest gold mine, but you can only dig with a spoon or a shovel. So they don't have the tools required. So maybe that's why they're getting a little bit of help from the US and Donald Trump, maybe to start putting some bulldozers in here instead of spoons and shovels. So, you know, that's going on. It's facts, whether you agree with me or not. Watch the news, and that's what's happening right now. So and then you can see the top 10 countries. So after after Venezuela, we got Saudi Arabia. We have Iran at the 4, Canada right over here. So we have the oil sand giant over here in Canada. Number 5 is, what do we got? Iraq. 6, United Arab Emirates. 7, Kuwait. 8, Russia. 9, we have United States, and finally 10, we have Libya. Okay, and if you guys remember, a lot of those countries have had wars. Okay, pretty much all of these countries have been involved in war at some time, and it's a pattern. I'm good at recognizing patterns. That's what I do as a trader, and I can recognize that there's a pattern over here, that all of the wars started in these countries. A lot of it's got to do with oil, okay, or something to do with the US dollar, okay? Don't call me a conspiracy theorist or shit like that. Here are the facts, okay? And we got to speak facts once in a while on these calls, okay? And let's speak facts over here. Hit the subscribe button, guys. Facts over here is you will learn something at Stock Sniper Trading. I personally guarantee this. So, it's hard to give personal guarantees, but I guarantee you that you'll learn something on every single call. So thank you to everyone hitting the like button. Thanks for everyone subscribing. We appreciate all of you guys, okay? I'm going to get into now the top down on gold. And we're going to start from the daily. We're going to move down to the hourly. Finally, we're going to bring it down to the 5 minutes. We have about one more hour until the futures market opens up. Right now, you can see the 5-minute candles are really shitty candles. These are what we call dog shit candles. Right over here, these spin tops with thin volume. You see the market is not moving anywhere. It's in a range. It could be in a bull flag to continue to go higher, or it could continue to rotate back down. But this is not good trading volume right now, okay? And guys, sorry, I just want to say hello to everybody. Welcome everyone on Zoom. Bruce, good evening. Thank you for joining. Leo Burrs, welcome. I hope I said that right. Or Leo Bros, welcome. Sergio, thank you for joining. Roxy, welcome. Philip, thank you for joining. Wayne, welcome. Justin, thank you guys. Guys, big shout out to Justin. If he's still on the call, I know he's a busy man, but if we can give a big, warm shout out to Justin in our group. He just welcomed his beautiful daughter this afternoon, around 3 p.m. during power hour. Justin, I hope you weren't trading at that time, but we welcome your beautiful baby daughter, Marina Corinne. So congratulations. She's going to be our new sniper in the group. And yeah, hopefully you weren't scalping 1-minute candles. Guys, I can't say this. My wife will kill me. I was about to say something when my son was born and my daughter was born, but my wife will kill me on here. But between us, okay, I was scalping while she was in labor. Let's keep that between us. Hopefully my wife doesn't hear this call because she doesn't know about it either, okay? I had to make some money for those diapers, and we got to do what we got to do. So don't tell her, or else you won't see Ron on here anymore. Okay. So congratulations, Justin. Well, welcome. That's beautiful. Congratulations to your family. That's awesome, guys. And welcome everyone, and everyone on YouTube. Thank you guys for joining. I appreciate all of you guys. From the top, who we got Romario. Thank you for joining, brother. Tony Gold, welcome. Thank you. Welcome. You're at work, but still locked in. Amazing, guys. So look at that. Tony is at work and he's still locked in to learn. So amazing. We're at work right now, Tony too. This is considered work, so we're at work too, and we're going to get locked in as well. So thanks everyone for joining. Jay Violet, welcome. You can hear me breathing. Good. If you can hear Ron breathing, you know I'm alive. If you don't hear me breathing, then we got some issues over here. So hopefully you guys can hear me breathing. Because if you don't hear me breathing, then Ron's gonna have some bigger problems. Raj, welcome. Everyone, thanks for joining. We appreciate all of you guys. Okay, so let's get into this. And Leo, you're at the gym. Amazing. Working out and learning. Amazing. Okay, so let's get into this. Right now, I'm going to go to the daily, okay? So let's start off. This is what we call a top-down analysis. This is what I like to do. It's more of a comprehensive analysis. I do this for all securities I trade. Do I do this every single day? So I got to be honest with you guys. When I trade by myself, I normally have this done at the start of the week. Preferably Sunday. I get up really early Sunday morning and I do all of my analysis on all of the securities that I'll be trading for that week. If I'm trading gold, if I'm trading US 30, if I'm trading NVIDIA, if I'm trading Chevron gas, guys, don't forget, guys, Chevron gas, add that to your watch list. Over here on our education, if you scroll all the way down to the bottom, this is where we're starting our new stock and index securities over here. Go to the Dow Jones, click on it, and they're ranked What is the Dow Jones? Number one is Goldman Sachs, Caterpillar, Microsoft, American Express, Home Depot, Sherman-Williams, Visa, United Health. And when you scroll down, there's all types of industrial securities. Here's Chevron. So its ticker is CVX. If you go over here to click on it, this is Chevron's logo. They are situated in Venezuela. Okay, so this is worth putting on your watch list, because I can guarantee you that this thing is probably going to appreciate in the next week, next month, next quarter. Why? Because look what's going on. Okay, Chevron is located in Venezuela. Investors are going there. I don't know if it's tomorrow, but sometime this week, all of the investors are going visiting Venezuela. Why? Who knows? You know, your guess is as good as mine. But if you want to read what Chevron is one of the world's largest oil and energy companies. One of the world's largest. Has a rich history that spans more than a century. Below is an analysis and breakdown of key historical developments, financial performance, strategic shifts, and challenges the company has faced to the current date. So there's lots of education there for you to read. And if you go over here, this is going to take you to Slick Charts over here. And when we're at Slick Charts, I can see it's trading at almost $156 per share. It was down 62 cents today, which equates to negative 0.4%. Here's the previous close. So I can see it took a little bit of a hit today. This is how much volume was trading today, 13.5 million. It's got a market cap of 315 billion over here, and there's other things over here relevant. If you want to go to a chart, you can go to the chart and you can start doing your analysis. Okay, so add this, guys. It's on my watch list. I'm watching Chevron as well. I might be, if I'm bullish on it, I might be looking to take some call options on it. Okay, so there's Chevron, and lots to learn, guys. Just follow the money. Follow the money. Rules of trading is follow the money. The money leaves a trail, right? Have you ever heard of the money trail? Just continue to follow that trail of money, and it will lead to where you need to go. And hopefully you can start making a trail of money in your pockets. Okay. So comprehensive top-down analysis. What do we got going on? Okay, so first thing is, remember this big run up? That was the previous all-time high of gold right up there. You guys know the number. That I always use like orange lines for the previous or all-time highs. Okay, so I can see it was 43.80. We came up there, couldn't break. Remember, we did a lot of analysis on this big bearish candle. We cut it in half, found the point of control. We talked about this pullback right in there, and we talked all about this, okay? And then this is where it found its bottom. You can see it found a nice double bottom right there, and it came, and gold did not break below 39.30, held strong. So there is a good solid area of support right below it, right there. Like, we did this analysis, guys. If you stretch this into the future, you will always have these zones situated. You see this yellow line, right click it, add an alert. I will have an alert here. If gold ever comes back down here, I might be looking to buy here. Why? Because I see that there was the first candle that broke bullish and closed above. There was buyers right there. There was buyers right there. Why would there not be buyers there again if it comes down, right? So what's the worst case scenario is place an alert when it comes down there, then watch, okay? So you see how then we made higher highs, higher lows, higher high, higher low, breakout. There it is. There's the big breakout. Monday, December 22. It broke a new all-time high, and it wasn't just a break and a wick and get rejected. It actually physically closed above. So if you waited for the confirmation bar to close, this is a daily bar. So unfortunately, you got to wait for one full complete day. There's the closing balance. So it closed above there. So this orange line now is not an all-time high. It's just a point of interest now. So all points of interest I use as yellow lines. Justin, I know you got to go, but thank you so much for joining. Go attend to your beautiful family. We'll see you. I would recommend taking the week off and relax. And we'll see you whenever you come back. Okay. God bless you and your beautiful family. And congratulations to you and your wife. Thank you for joining. Okay. And look, guys, it continued to push up, push up, push up. We created, there's gold's new all-time high. So that was the price discovery. When we came up there, it discovered the new all-time high price. There it is, 4,550. So you guys know we talk about psychological numbers and levels. That's as psychological as it can get. Okay, right in the middle. If you were to cut 4,400 and 4,600 in half, you get, if you cut 4,500 and 4,600 in half, you get 4,550 right on the dot. So there's where it came right into there. And look, when it continued to open, it couldn't break out of there. So what do we call those? We call them tweezer top highs. Look at their equal highs. See that wick of that all-time high on this day is the exact same as this wick. So that's what we call equal highs in the markets. Learn what those are. Equal highs, equal lows, because psychologically they mean something. The market did not break any higher. So the sellers held it down. That's what we call, another word for equal highs are tweezer tops. When we talk about tweezer bottoms, those are equal lows. So you can see right now, and now when I'm looking for an established zone, I can go from my all-time high, orange line, and remember I discussed this yesterday. This is where I'm making a zone. Why? Because look at this spin top candle, came up, down, and it closed right there. Next day, the big bullish ignited body opened right there. So it is a point of interest, right? So that's going to be my zone where the sellers are. And then I can see that we came right back down, we pushed down, okay? And if I extend this into the future, I can see we traded in there Tuesday, and this was yesterday, basically, earlier today. It came up, but look, and then came right back down and closed. So we're still technically, look, the opening day candle, it's ignited bullish right now, but we are still below this big red zone. So if it gets rejected, we could continue to fill, sellers could be filling down this wick and maybe break. And where could we come down to? Remember, this yellow line was the previous all-time high right over there with volume closing above. This yellow line could be turning into support. So if it sells all the way back down there, you can see physically we're trading in the heart of that candle, the point of control. How can now I correct this and make it more relevant to recent volume? Is I can take that yellow line and I can just move it up right now, cut it in half, see how it's nice psychological number, 43.90, and then let me find my point of control zone off that big body candle. How do we do that? Very simple. Grab your Fibonacci tool. There's your opening balance, big bullish ignited bar. Match it up where it closed. There's your open of your bar. There's your closing price. See, Ron, you can tell Ron didn't smoke right now because he's spot on with this yellow line, right at the 50% right there. And then now I want to get the control zone. How do we get that? Very simple. Just look on the Fibonacci. It's just the one line above, one line below. It's either the 382 or the 618. And is it red or green zone? I'm going to make it green. Why? Because I want it to represent buyers. I want it to represent support. I want it to represent demand. I want it to represent, if it comes back down in here, it's got a high probability that these buyers could control it back, coming back up. If this breaks, then I flip it. If the sellers close below here, I flip it red and it can turn into an inverted block with sellers and then it could further push down, okay? But we're not there yet, but we gotta acknowledge it. I acknowledge it by placing an alert and I alert myself if it gets down there, okay? One other location is, this is like an inside block. You see the big bearish candle, it found a nice little bottom down into this location. So this would be obviously a better ideal location to buy, but it might not come all the way deep down in there. It might just trade right in here and then it produces a higher low and continues to go up. So if this one doesn't hold up, this would be a better discounted buy, and it's been tested here and here and here and here and here, and that's what produced that big run up, okay? So if it gets down there, that could be another location that I'm looking to entertain buys. And then you can see how I can kind of figure out a little bit of a zone. See what I did? Body, body, body. Bring it down to those bodies. There's my zone. You see how it's the same size, a little bit above and a little bit below the yellow marker as your point of interest. So you can start to see, you can teach yourself freestyle how to do this without even using the Fibonacci tool. You know, when you just know what you're looking for, you know exactly what you got to do. This is going to become part of your daily routine. It's going to become part of your job. You're going to be able to do this stuff with your eyes closed every single day. Why? Because you know exactly what you need to do, okay? You can give me any security, any time frame, and I guarantee you I will analyze it the same way how I've been doing for the last 6 years with you guys live every single day. You know what I mean? And I don't deviate. I don't change anything. I don't. I do the same shit over and over and over and over. And someone asked me, Ron, can you do this for any security, any time frame, any? Yes, I'm telling you, yes. You can do it for anything. One day I'm going to do a Freestyle Friday session. We'll do a 3-hour session where you guys just tell me a chart, a time frame, anything, and I will analyze it for you. Anything. I don't care what it is, and I will prove to you how this works, okay? If you don't believe me, I know some of you guys are skeptics. Some of you guys are skeptical out there because there is a lot of financial gurus out there and things like that. But I want to keep it plain and simple and tell you this shit works. I'm trying to not overcomplicate this for you guys, okay? Now, we got some other points of interest maybe in our red zone to mark up. What are they? I could be marking up the body to body right there, or I could just come up to the wick. The reason why I come up to the wick and not the bodies in this situation is because I like that nice psychological number, 4,500. So this is the difference, guys. I'm a freestyle trader. You know, sometimes I always say the body close and the body open is very important. Yes, it is. You can leave the line there. If you do, you are correct. But I just want to get the maximum highest move. I know it's still a lower high inside the red zone, but look at the nice psychological number. Like, look how much better that sounds. 4,500 on the dot as opposed to 4,495. I love that. And that's where the big sell-off started yesterday. And it came all the way down, and that's where yesterday's low was. So yesterday's low is fresh. It's in the market. Why don't we mark it as a point of interest? So I can see we got down to 4,423 and a quarter. If you round that up, 4,425. So you know those quarter increments that Unc Ronnie always talks about. 4,400, 4,425, 4,450, 4,475, 4,500, 4,525, 4,550, and just look at how bodies of volume reacted at these levels. That's how you learn, okay? So just continue with those quarter increments. Do they always happen? No. But do they have a pattern of revisiting these areas? Yes, okay? And then just use common sense when it gets down there, right? Add an alert if you like, if we get down there, okay? And I can see it's still a higher low. And I can still see we haven't transacted in the point of control of this zone. So buyers are still there holding it up. But we got some bearish volume. Now it's barcoding on daily where it was bullish here, bearish there. Now we opened bullish ignited. We might be coming back up. It might get a wick and go back down. It might consolidate here for the rest of the week. It might be bullish over here on Tuesday, bearish on Wednesday, maybe bullish on Thursday, and another bearish candle on Friday. And it could be setting up for the sell-off over the weekend unless there's some news that happens around the world. And then boom, it's in a bull flag and we're breaking out for a new all-time high. And we're starting next week, Monday, and gold might be flying above 4,600, 4,700. There could be missiles going off this weekend for all we know, you know, so that won't stop gold. Gold will continue to go maybe up to 5,000. So it is technically still in an uptrend. When you look on the daily, it's got this big move right there. There's, okay, first top, 45.50. There's the bottom. That didn't crash gold. It didn't come all the way down there. It stopped right there. That's still a higher low holding. And now we come back up for the next leg. But there you see it didn't break out. So that's why I have that 4,500 on the dot yellow line mark. And there's your lower high, right? Coming in. It's not a double top up there. It's a lower high. This is another technical pattern. So the sellers who sold the all-time high are lowering their offers right here. They're probably strategically doing this to continue to offer and push gold down. So logically, if we come down, we're going to test this yellow line, 44.25. I can see it got a wick there and it got a wick there. So there is good weekly support there this week, right there. However, if it breaks and more selling pressure, there we're trading right into the point of control of the big body candle that started this move this entire year. This is basically the first trading day of the year, Monday, January the 5th. Okay, and it was very bullish open. This is the start of a yearly candle. If you want to go really, really old school and you want to look at yearly candles, believe it or not, I do that. I look at candles, how they open and close. I will revisit this on December 31st. 2026. When it closes, I will look at the entire yearly candle. If you have advanced platforms, they do allow further than monthly candles, but it gets maxed out at yearly. I would love decade and century candles if they're available. If anyone can get those, please let Unc Ronnie know if you guys have access to those. I will I'll give you a good gift if you guys can get those decade or century candles. If you can show me those, we'll give you a big reward here at SST. So you can still see we're still in this bull flag. Like, what if we just consolidate in here, and then there's another big move that breaks out, and we're continuing to trend through here, and then we got a new all-time high. Okay, so yes, we could be continuing to move out of here for a new all-time high, but we could also maybe continue to trail down. That's why I've got all these positions ready if it comes down. Now, how did we open up today? Where did we close? So there's the bearish candle. It went down, it came back up, and it closed. It did not technically engulf that entire bullish bar right there, okay? So what did we do? We closed right there. So we got a closing balance, daily candle, and an opening balance. I noticed that there's no gaps in the market. It didn't gap down. It didn't gap up. It was a clean transition from the close to the open. 4,455. That is technically our lowest point of the day, and it is a bullish ignited open, okay? We've only been open for an hour and 15 minutes right now, so the market is still young. We still have almost 22 hours left to trade, okay? So it opened bullish. That is a fact. It is ignited, and it's continuing to move up bullish. So even when I look at the highest point, we are trading right now at the highest point. I know it's not going to just stay like this all day today. So it went up $10, right up to 4,465. That's $100. That's 100 pips right there from the purple line to the purple line. So if we continue to make up bullish, maybe we'll see this big black candle? We're up to the red box. 4477. Why the red box? Because look what UNC did back here. That's how I identified that bearish supply zone. I looked right there. So I know you don't have to add a yellow line. I'm just doing it for you guys, but that is also a point of interest. The bottom and top of your zone are also points of interest. Okay. I don't place a line personally because I know that the top and the bottom of a zone, like this one right here too. See this green zone, the point of control? I know if it comes down right there, the top of the green zone could be a reaction. And look how it's right at 4,400 exactly. I just mark off the exact middle, the psychological mid. But I also know if it comes down to the bottom of the green box right there, that is another point of interest, because that's the whole point of control, right? So I could place a yellow line there in the middle and at the bottom. I don't do it because it's a little excessive, right? Because I know what I'm looking for when I'm trading. I do this for you guys so you guys can continue to learn. So if we come all the way up bullish, we come in, it's bullish, bullish, bullish. Look, it could get rejected right there at the bottom. And then look at the base of the candle. If I grab my Fibonacci tool, I look at the open and the closing price. Look at where it is. That yellow line is situated just right above the 0.5 and the 382. So I know that this is going to get a little excessive, but that's the point of control right there of that bearish candle. But the bigger red zone is the all-time high supply zone. So you can see if it trades in there, it's trading in the point of control of that bearish candle and also confluence of an all-time high supply. So that could strengthen, that there could be more sellers there that just are there offering and push today's daily candle down, and maybe it will come back down to the opening price. And you see it hasn't been violated. It hasn't been, there's no wick to the downside. It hasn't been broken. It opened very ignited. So if it does flip and break, then it could turn into a bearish pin bar shooting star candle. Then it's coming down black, 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 black. And then there's a close of a candle and an opening. 4,448.49 right there. So that could, measure the move. Just from the purple to the yellow line. Just simple math, guys. 55 down to 48. What is that? 7, right? So I know $7 move on gold is 70 pips. If I get that move later tonight, that could be easy. 70 pips in my bank account, 80 pips right there. Just from the purple to the yellow line. I'm not looking for a move to come all the way down there. I'm a scalper, right? Maybe that's all I need. I just need to break today's low and just fill right there, and that's it. And then maybe secure 80%, leave the rest running at break even. If it wants to continue to run down, my runner will go. But it could just technically come right down there and then go right back up, right? And then I just gave back 70, 80 pips to the market. Why? Because I'm not following my scalping plan. I'm not following my points of interest. What's the point of putting all these lines and points of interest if you're not going to follow them, right? So that's what I do. I spend time plotting these when I trade. So I want to adhere to these. And if it continues to go down and break, okay, then we know what we're doing. We have a job to do. We got to continue to fill the wick, fill the wick, fill the wick. We're filling that wick and that wick. And then there's the pause, next yellow line, because it could be a big black candle coming down, but then the big support is right there. If that breaks, then the top of the green box, so on and so forth. And that's how I trade, guys. Very, very, simple style, nothing too crazy. And now what I do is I break it down from the daily. I know it's a strong daily open, but now let's go on the 4 hour. 4 hour gives me a little bit more context to what's going on. Now I can see the 4 hours, how they moved up. This a whole one big leg. There's the all-time high. Here's your big 4 hour neckline. Here it came right back up. There's where it missed its opportunity to retest all-time highs or break for a new all-time high. That's where they shut it down last night at the open, 4,500. And you see the 4 hour candles came down. Then they were barcoding today. There where it was bearish, here's where it opened bullish. This is Europe. 2 a.m. to 6 a.m. But it didn't come all the way up. Lower high, closed below there. Then we opened right here, 6 to 10 a.m. This represents pre-New York, COMEX, North American news, and the first 30 minutes of Wall Street. And it came down, made a new lower low, and closed, almost engulfed. Then you had this big indecision 4 hour candle from 10 to 2 p.m., where it was initially bearish, made that lower low, came up, but didn't break for a new high right in there and back down. And slowly we're making our way back up on the 4 hour candles. So that's why I have this identified, because it could just come up like a staircase, and then they have an elevator big black candle coming down later tonight. But if gold can prove to me that it breaks and closes above here, then we could naturally be continuing to move in a bullish manner getting through here. But right now it kind of consolidated, bearish, bullish, bearish. It did come down, but look at the bodies of the candle. If I was to kind of just box in that area of all of the 4 hour volume, that's how I would do it. Just like if it was 5 minutes. See how I boxed it in? The bearish candle, the bullish candle, the bearish volume. I got that bullish volume, and today's bullish volume. So we are in this 4 hour consolidated move right now, where it's just sellers are selling, buyers are buying. Sellers are selling, buyers are buying. Sellers and buyers are buying and selling. Here we've got a strong ignited open, and we are continuing to push up. But I still see today's high is lower than that, lower than that. We're still below this big red zone. So, it could just come up, go back down, go up, go back down until we have some news or a bigger move coming in the market. So right now, we are pushing up bullish, but we're also counter trading the big sell that started yesterday, okay? And we know that this red zone, what it represents on the daily, okay? And then now if we go into the 1 hour, now I can see specifically at what time things broke down. This was last night. Remember the future session, 8 p.m. If you cut the hourly candle in half, found the point of control, you see 10 p.m. it came in, and look at what it did. It came into the point of control of this big hourly bar. See what I mean? You can do this on all time frames, guys. I bring it down to the 5 minutes, and I saw that you guys voted like 90% on the poll that you guys love 1 minute education, and that made me so happy last night. I couldn't sleep all night because I love educating on the 1 minutes. Okay, it's fast, it's furious, but you guys are going to learn so much in 2-3 hours. Like I can condense 1 month's worth of education in 1 3-hour session if we go to the 1 minutes. But I need you guys to come to that session with education in mind. Okay, because sometimes when we just force live trading, then you guys are forgetting to learn, and we're just looking at live trading, right? But once in a while, we got to go straight to old school education and focus and learn. Okay, I promise you, it's worthwhile learning as opposed to just looking for live buys and sells. Okay, we'll do that. We do that with you guys, but I promise you guys, learning it, you'll get so much more value out of it, because then you'll be able to do it on your own. Okay, so this is how the 1 hours have continued to move. We came down, we made some lows, but they had big wicks, so there's a lot of buyers in here bringing it right back up. We came back up with a nice big bullish bar at 11 a.m. There's noon. We consolidated near the end of the day, bullish, bearish, bullish. We just opened right there at 6 p.m. That's, the big ignited open. And right there, we just hit the daily high, and now it's coming back down. So we're still in this hourly range. I don't see any blue volume closing above this big purple line. I see the big bearish candle come down there. I see the rejection there. I see a rejection there. And I see a rejection right now. So sellers are still technically here, but we do have buyers here as well, okay? So this could be in a range. It could be choppy. It could be trading going up, down, up, down. When I see volume like that, then I got to know that if I go on a buy and I go up 50 pips, I better secure some money because it could come right back down. And same with if I'm selling and it goes up 50, 60, 100 pips. I'm obviously, when you take a sell, you want to look for a big, huge black candle but you can see the way how they're trading. Like imagine you bought that candle and you didn't do anything. It came back down. Then maybe you sold down there and it came back up. Just look at the history of the price action, how it's been trading. So I can see right now we were bullish and now it's coming back down bearish. If I go into the 5 minutes now, because we're leading into 7:30, now these are the 5-minute candles. Okay, so you can see that 5-minute candles, they also have some resistance. They got points of interest. I can see a double bottom right there on the 5 minutes. It came down right there, one bottom. There's the neckline. There's the second bottom. There was that push closing above, but it didn't really, make a big move and break. So it came up, but it's still, that wick and that wick are still lower than the original sell right there. So we're still in this resistance. Sellers brought it down, but you see, they haven't penetrated down to this yellow line and closed it below. So it consolidated with higher low, and then we just advanced right back up there. And now look at, if you were in nice buys, like remember we measured the purple to the purple was $7.70 pips. If you have made 70 pips on those buys, look at how easily it can come right back down and you just washed away a good daily goal, right? That's why, guys, in these markets, guys, like if I was out on the streets and I handed you $100, you would take it, right? And you would put it in your pocket. Why do we not do the same thing with trading? If we take a trade and we're up $20, $50, $100, $500, whatever it is, take some money. Take some money. Let's learn to stop being greedy. Okay. Believe me, no one wants a bigger trade than me when we trade. I want this to go to the moon. If I buy, I want it to go to all-time highs. I know that. But I know that it takes a catalyst to do that. It takes big news to break through. This is huge sellers. I know we're just looking at a chart right now and all we see is a big red block, but this is where the all-time high institutional sellers sold gold. So there's got to be something significant to break through here. Otherwise, sellers are selling, right? So you got to understand when you're in a buy and you're going where the sellers are, you should be doing something. Same with when you're in a sell and you're going where the buyers are, you should be closing a little bit of profit because it could just come right by into those buyers and move back up, okay? So we have a bearish move coming down right now, leading into 7:30. We're going to have a new 30-minute candle. So I see that we just broke today's daily low right now. So I want to see now, this candle has 3 more minutes to go. Will this bearish volume close technically below the purple line? Will it just get a wick and go back up and close above the purple line? I don't know what will happen here until the body closes, okay? But what I see is this big bearish 5-minute candle inside. This is a big candle. Remember all these shitty candles? This one opened bearish ignited and closed like 99.9 to the low. So that's a good candle to cut in half, right? So I just cut it in half right there. And I also see it close below, like right here. It closed below the structure right there. So I can see technically closed below. So that's a big candle and it's continuing to push down. So I want to identify 50% of that candle. And I also want to figure out the point of control here. Because if it comes back up over here, maybe I could take another sell position in that point of control, okay? It hasn't came back up. It hasn't retested this candle yet. So I'm just now identifying right there is the bearish point of control of that big candle at 7:20 p.m., okay? So there's how I analyze it. This is where I stretch that zone into the future and I wait for it. Will it come back up? And if it comes in there, will it go back down? Okay, will it come back up and close above there? Then I flip it green and then maybe we're testing the daily high again and maybe we're going to break out bullish. But that's a good block to maybe possibly look to take some trades off of, okay? Because you can see it's a big solid bearish candle. When I say a structural candle, that's the one. That one closed below all of this. It opened, ignited, closed near the low, so you know how powerful the sellers are there. So if the market ever, it didn't allow like sellers, if they miss this candle and you miss that candle, you're not in. So now maybe there's a lot of now offers now starting to pend inside here. So if it naturally comes up with buyers, all of those sellers could now start offering, getting filled, and then that could be where the lower high is to continue to push gold down to come down to here, okay? Will it come down there? Or will it come up here? I don't know, but why don't we patiently wait and be disciplined to see what happens? You can place an alert at the red line. So you notice how I placed alerts at the daily positions. I can also place an alert at this 5-minute location right there. I've created it. So I've got an alert set up in case it comes down here. Guys, I'm just going to put it on the Discord channel on commodities if you guys want to join in the chat over here. So this is our Discord commodities channel with everyone in here. And let's see what we got going on. Okay, did you guys understand tonight's analysis? Did I help you guys out with anything? If you can take one piece of advice from today, remember what I said at the earlier of the call. If you guys are just joining us late right now, remember what we said. If let's try this for 2026, something new in trading. Stop adding to losing positions, okay? Because that's what's destroying you as a trader, okay? I'm just speaking facts. So if you keep adding to losing positions and like, let's say this, you were in buys and now you're in drawdown and you added another buy and you're in further drawdown and you added another buy and the market is now continuing to move down. It could be squeezing you to the opportunity where you could do a lot of damage to your account. So we have a tendency, human tendency, to add to losing positions. I don't know why we do that, but it's easy to do that. What we do have a hard time is adding positions to profitable trades. So let's try that this week. Let's try that for this month. Let's try that for this year, guys. Reverse engineer your mindset. And I promise you, you will do much better in trading if you just listen to me. I know a lot of stuff I say goes in one ear and out your other ear. I do talk fast here. But for those of you guys that are listening to what I'm saying, I'm telling you, it could be just what the doctor recommended, okay? And I'm honestly saying that, okay? And right here, look, we broke. Did any volume close below there? No, so it came back up. So it's still holding some support. Now we got the big bullish candle coming back up. So remember, if you're not in a trade, our job is still to analyze. Just because I'm not in a trade right now doesn't mean that I'm looking at TikTok and I'm looking at the TV. I'm looking at this candle. I want to see. So far it's holding. Yes, it did break the lowest point, okay? So I observe that. The way how I observe is I don't draw all of these lines, this, that. I do this for you because I make mental observations in my head when I see these things. Don't forget EMA, absolutely, okay? You guys can tell I don't use too much indicators. You guys remind me. There's our EMA 9. So you see how the EMA 9 is in the point of control zone. Now we're trading at the 200 EMA, this purple line. Let's add our daily bar. And we know how we opened, was initially bullish, ignited. We came all the way up. There's our highest point. And now we got rejected, coming back down. Now we're finding a little bit of support. So remember, now this candle just made a high, but it's got 3 more minutes to go into the close. Will it engulf this black bar? Will it close higher? It's getting rejected. That's a lower high. We still have not transacted into this red box yet. So maybe we might get some consolidation. Remember when I tell you guys it takes like 2 bars, you can, before they even close, maybe you can identify a range, and that's how I identify it. This blue bar has not closed, but I can see it's still below the opening position of that black candle. I still see we're holding where this bar closed, and we're just trading inside here. So it came up, that's a lower high, and pushing back down, okay? So maybe we'll get continuation selling. Maybe we might be able to sell. EMA stands for exponential moving average. It's this green line and this purple line. The green line is the 9 EMA. It represents like the last 9 candles, the last 9 bars, the moving average of it more. And the 200 EMA, this purple line, more represents, it's more of a higher time frame moving average, representing the last 200 bars, okay? And this candle now is closing in 1 minute and 45 seconds. Leo, we have tons of education, tons of courses, tutorials, webinars, breaking down everything like bullish engulfing candles, point of control candles, how to do support and resistance, how to find demand and supply zones, how to find order blocks in the markets, what is EMA, what is Fibonacci tool, how to use it, Bollinger Bands, all MACD, all the indicators, things like that, guys. We have a big library of education. I guarantee you will answer any question you have, okay? It just takes some time for you to go through the education and find what you're looking for. But they all have a title, and specifically, it's exactly what you're looking for. So just go through it, and I promise you, if you want to study on EMAs, there's going to be maybe 5 videos on EMAs that will teach you what to know about. Okay, so we have this bar. It's still bullish, okay? We're still holding, still trading inside here. We have not traded up in here yet, but it could continue maybe to have one more leg to push down. But we also don't have a black confirmed candle closing below here. Amrit, how are you, brother? Happy New Year. Thanks for joining, bro. I hope everything is good. Amrit is our fellow Canadian in Toronto. He's our sniper in our group. Okay, so here's the close. Oh, sorry, GTA, Guelph, baby. Okay, yeah, Guelph. Okay, sorry to insult you. Guelph, my apologies. Okay, so it did close bullish, right? But it did not engulf. It didn't, close, but we got now a bearish. This might be like a continuation to push down, but I see it's got a wick and a wick. So even if this black bar comes down, it could get another wick and a higher low and continue maybe to come back up. But right now it could also barcode in here. It's bearish, it's bullish, it's bearish. It might be bullish in here, okay? We're 25 minutes away from the futures market opening up. We're still below. It's still technically bearish off of this leg, but we still have this daily point of interest right here that made support right here. We made kind of a higher low support right here, and we've got like a higher low support also in the market as well. So it all depends on what leg we're looking at. This one is still the bearish leg and might have some selling pressure, because look at now how the daily candle could be possibly flipping as well here. Okay, I'm going to check spreads. I'm going to check my spread now. If you guys don't mind just checking out spreads. I have a high spread right now. It's at 1.2. I normally like to trade when it's like a half a pip spread. 1.2 is a little higher than I normally like, but I'm not in. I would have liked maybe possibly to get in, so I got to watch this thing now. So what I got to do now is watch, will it create a new low below that wick? Will it get another higher low and come back up? Will this candle be the candle that will officially close below this purple line? Then I know I've got 5-minute volume closing below the lowest point of the day. I could also maybe sell off of this purple line. Like if it comes back up to retest, I'm still waiting for this big red zone up there. But what happens if the market doesn't come up there? What happens if it just comes right there on a and then goes back down? Okay, so now that I'm not in this, I would have loved to take that candle. That's your 3-bar Tetris play. Okay, so get to know your bars as well. You got your bearish bar, you have your inside blue bar, and there's your ignited bar. Continue to push down like a Tetris piece. If there was smaller wicks, it strengthens the Tetris piece. The reason why I stayed out of this to take that continuation sell was because this was a rather long wick and it had a wick there. Sometimes you get trapped by taking that. You take the sell, it comes down for about 10, 15, 20 pips, 25, and it catches a wick right there and it will come back up, and then we're trading back in here and you're in drawdown. So it's give or take with this style of trading. Best thing to do, in my opinion, is wait for the body to close, okay? Because this would also be, if you took that sell, you're taking it on impulse as well, okay? But sometimes you have intuition with how the market is moving. Sometimes you'll just naturally know what you're looking for. There was that pullback inside bar. They trapped the buyers, and the trend is continue push down. So, wow, this is a big push down. I forgot what it's like to trade Tokyo gold. It's been a few weeks and it's still what it is. Holy shit. Like, these are big body candles. My goodness. Like, just measuring this candle alone is 65 pips. Like, Gold has big volume at this time. Tokyo sessions are a blast. Oh, Husky, wow, you sold from 4465? You sold the highest point of the day. Sniper entry, nice. Do you guys have any questions about anything? Okay, because we're about 20 minutes away from the futures market open. We've got a big bearish daily candle now. But we can see there was being strong support over here at this red line, this location, okay? So are buyers going to step in here, or is it going to have further drop down? And it's better to look for buys, again, at the yellow line, right? That's a daily point of interest. So if it sells all the way down there, that's where maybe possibly we can maybe look to entertain a buy down in there, okay? It's better to buy at a daily point of interest as opposed to just a 5-minute red line, right? This one holds more weight because I can see when gold traded down there earlier today, there was buyers. Came down there again, there was buyers. So maybe if it comes down there again, there's buyers probably accumulating down there, okay, pending down there. But we haven't revisited. So it came down and it's got a wick coming back up. So remember what I said? I want to see if this candle will physically close below the purple line. Will the purple line be the cut point where I can cut this bar in half? Will it come back up? Okay, so you can see that the purple line is technically like cutting it in half. Not exactly, but if you grab your Fibonacci tool, the opening and the closing balance, see the 0.5 is the purple line right there. So if it comes back up and retests this, you know we're trading right back into 50% of that bearish candle, and it's at the daily point of interest. The previous low could be where was support, could be initial resistance. And this is where now your 9 and your 200 EMA are converging. So when you have the green line cross below the purple, that's what we call a bearish crossover. And it could signal that we have further momentum to go to the downside. But we haven't had like a good solid pullback into here yet. Death cross. Yep. Sam, Happy New Year, brother. Happy New Year. Happy New Year to everybody. Happy New Year's to you, your family, everybody. Okay, so you still see it's got lower highs, lower low, lower high, new lower low. So the sellers are still pushing it down. Let's see the reaction if it gets down to here. 4448 down in here, okay? This is the daily point of interest. Will it bleed all the way down there? Are sellers going to start closing their positions there because that's where the bigger buyers are? And maybe if I'm looking to buy, that might be a good location to potentially look for a bounce buy to come back up. And then if it's also a counter trade. So if it comes down there and I look to entertain a buy, the big selling leg is coming down. It could be a buy, and then it could just come up, right up to there and then go back down. Right? And then if its sellers are still in control, they push it down further. If it comes down there and it produces a double bottom at that daily point of interest, double bottom traditionally has more volume, then that could be what it needs to break to come back up to test that big red zone right there. And that's where the big sellers could be. You know what I mean? So I just trade off of these zones, off of these blocks, and just trade from one to the next one and just go like a ping pong game. Okay, but let's see, okay, because now we're getting close to a new 15-minute candle opening up. 15-minute candle is obviously a higher time frame than 5 minutes, so holds more weight, and we're approximately close to opening up the futures market. So maybe it bleeds out, and then the futures market brings it back up, okay? Like time and sales of things like that. Maybe that's how we got to create a little bit of a narrative for ourselves and see if it actually plays out. What if it bounces right now and then for like 10, 15 minutes, and then the futures market is the next big bearish leg coming back down? Okay, so we got to also see if that narrative plays out, because we got to kind of figure out these patterns. We got to catch what the markets are moving. We got to learn from this, because this is not going to be our first and last Tokyo session we do together. We got to understand what they're doing so we can see what time they started this selling. 7:15. We're moving now to 7:30. Will it recover at futures? Will it just be a little bit of a counter bounce and then they continue pushing it down? Time will tell. Time will tell. I have a pretty high spread. Holy shit. I have 1.8 right now. So that's telling me that there's a lot of volatility in the markets when there's high spreads. So it affects your orders where you're getting filled as well, especially when you're using like market executions. Okay, so you see it came down there. There's a big wick coming right back up. But how are we closing? Where are we closing? And this is the close in one more minute. What's your bias, guys, in the next 15 minutes, okay? Because we're going into 7:45 now. Are you guys still technically bearish, or are any of you guys leaning towards maybe looking for a buy, or some of you guys are still undecided right now? Leaning on a buy? You guys are in a small buy? Okay, let's see then if it can come into this zone at this daily position. Also, just tap the psychological number 4450, okay? So that's also very important, 4450. Ron always talks about these psychological zones, but a little further down, that's that daily point of interest, that 4448. So let's see what happens in there, okay? Here's the close. So it's still bearish volume, closing below a red line. I know that's now resistance still, so this might have further momentum to bleed. Remember, this red line came from, there it is. See how it just came down there and tapped real quickly down in there? Did you see how quickly it tapped? Okay, let's see if it returns it back up now, okay? Because we just tapped down into there. Let's see if it's still a bearish candle, still a hanging man candle, still has that black volume. Will it flip up blue? Did we find some initial support down there? Will it come down further, deeper down into there? It's still black. Okay, it hasn't flipped, still black, so they're still offering on this bar. And this one is the opening of our new 15-minute candle as well, okay? So we have higher time frame volume. It's still bearish. We got lower highs, lower lows. Now it could officially come in there, and let's see if it can tap right into that green zone and officially like hit that yellow line. And then let's see the reaction there. I just want to mark up one final wick, that wick right there, because if it breaks that, that was the last low that held gold up at 4445, okay? And that was at 2:15 p.m. today. Okay, so it's still coming down. It's still coming down bearish, okay? So maybe now we're going to get our official tap inside there. Okay, so we are inside. We are transacting in this zone. That yellow line there, 4448, okay? So are we going to see a whipsaw wick coming back up that just got filled? Or is this black candle going to cut right through here and then it's going to continue to be bearish, right? So this is our first initial reaction inside here. Okay, so it tapped in. We've got 3 more minutes to go into the close. Still bearish. Still pushing down, okay? So now it came right at the yellow line. Remember, we have the green zone, a little bit above and a little bit below, okay? So maybe at the bottom, okay? There's the tap, you see it? So it's transacting at that daily yellow line. This is where if you have a pending order, it's activated now, okay? So you see there is a rejection wick off of it, okay? So facts right there, right at the yellow line. There is that solid wick right there. And if you had a pending order, it's just moved up 30 pips, 25 pips in profit. But if we're waiting for the bar to close, we got to wait for the official bar to close. So it came up, but then the offers are still coming down because it's coming down from a higher time frame, okay? So where will it close? You know, are we finding our initial support? If I look back, bringing it backwards all the way, then I can see there was the support. There was the support, okay? So now again, we got initial support in there. This is the first 5-minute candle that's transacted inside here. Still very bearish. Where will this bar close? Very, very, very bearish right now. Husky, nice trade. Beautiful. Okay, so one more minute. So you still see how powerful the sellers are. They can break through this. Okay, this is big volume coming in. Will it close below here? And that wick is where the liquidity is. Okay, so when we talk about liquidity, it's below here. Okay, sorry for making this so big, but there's the liquidity. That would be a nice buying area. Okay, I'm gonna take a buy, like entertain a buy, if it breaks this red line. I believe that that's where it could rotate the market going into the futures. That's just my opinion. Maybe it doesn't come down there. Maybe it's still holding here. Next bar could be blue coming back up. Maybe it goes black, blue, black, and then we open up the futures, could technically continue to bleed out, or we could find the rotation of a move coming back up. But if we are buying, we're also counter trading. You got to understand that too. Husky, it's approaching your TP. Your reaction area is 4445. Perfect, right there. Yep. Okay, so look at it now coming down. Here's the close. So remember, if it closes near the low and below here, it could open ignited bearish and just continue to bleed right out, or it could open blue coming back up. So there's the final push. Okay, so it did close below. See how it opened ignited bearish? Okay, and now got a little bit of a support. It's blue, but if it comes back up in here, it could go right back down. Okay. So you see what I mean? How you got to be fast. Flip the zone red. It's still red. It could be blue, 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 come up and then go right back down. But it's already got a shallow rejection that it could continue to push down. Okay. Right now it is holding down in there. And what time is it? We have 9 more minutes to go till the futures market. So watch. It might be like clockwork that it could reverse during the futures. It could be a small pullback and continue further intense selling. Okay, I'm going to go in a buy. I'm going in a buy now, okay? I'm in a buy to see if we can come back up to this red line. The red line is where it was previously support. Maybe it's resistance right there. My stop loss would be, maybe I'm going to place my stop loss just below if it breaks that red line because I don't want it to further drop down. That's my stop loss for this trade, okay? So I'm in a buy, and I want to see if I can still be in the trade. If it can close above here, maybe I can flip this red zone green going into the futures. I'm already in the profit, like, you know what I mean? That's 15, 20 pips, but all the way up there is we're looking for about 35 to 40 pips up there, okay? And then it's to just trade from the yellow line back up to that red line, okay? And it could also come up, get rejected, and go back down. So I have to manually watch this. But I took the buy at the yellow line, like right at the yellow line. Why? Because it's a daily point of interest. I wanted to take the buy a little lower down there, but you know, I just pulled the trigger when it came down, came up right up there, and then I pulled the trigger. Okay, we're at 44.50 now. We're at that psychological level. This candle has 3 more minutes to go. It's nice and bullish. Remember, if it reaches that red line, I can start to reduce my risk. I'll be up almost 40 pips at that time. I know I'm counter trading the move. We've got to have some counter trading rules, and maybe it could extend out during the futures market. Maybe this could be the true neckline. It comes up there, and then maybe futures brings it back down, right? Because I'm in the counter move right now. But I'm buying at a location where there's bigger buyers, a yellow line. And you see how you can nail it right away and grab some pips? Okay, that's a great move, guys. Like on a counter trade, that's 25 pips. That's normally what I look for when I'm scalping. Like sometimes I'm just in and out of that bar. Because when you're trading these type of candles with the standard lot, that's 250, 300 US dollars in 2 minutes. That's like a daily wage for someone working 8 to 10 hours, guys. That's why I'm telling you, we really got to value money when it comes to trading. Because some of you guys are going to pass those $100,000 prop firms, and you'll be able to trade with standard lot sizing and to take a position like this. Okay, but if we didn't do anything, we got to wait for the body to close, unfortunately. Okay, so it's coming right back up. It's refueling itself. It still has not created a new high yet. So it came up nicely, but it's still lower high, and they could push this thing right back down, right? Because it is got a lot of selling pressure. But can we find one bar? This is a great bar so far, but remember, it's how it closes. Okay, but red line is a target for me. I will do something there, whether it's reducing my stop loss, whether it's going to a break even, whether it's trimming some profit out of the market, depending on like where the bar closes. If it comes up there and it closes above that red line, remember that could turn into support for my next bar to continue to fill up to here. Okay, it's a good solid engulfing bar, but we're going against all of this selling pressure. That's approximately 30 pips to engulf that candle. We're still pushing up 4451. And we got 40 seconds still on the close. Oh man, I would love a nice big bullish engulfing bar close above here. Maybe next bar will pop ignited, continue push up. But if we get a nice strong blue bar, at least I'll be able to cut it in half. Maybe I'll be able to flip this red zone green. We can build off of this. You know, it's going to be very, very critical as to where this bar closes. Okay. I can't stress the importance of this. And here's the close in 10 seconds. Sergio, it's a fantastic candle. Yeah, but still going against a lot of selling pressure. So we need a big solid close here. Okay, I'm going to assume it closed above the red zone, so I got to be fast. Red to green. Is it an ignited open? Yes. Do we have a short wick on our previous candle? Yes. So can we break and do our job just to fill those wicks and get up there? And if we break out, maybe we'll trade into this black candle right around here at 4453. You know, it's still holding bullish, but we didn't break. Okay, so if it pulls back, I've now flipped my red to green zone. So it could be like a double bottom down in there. Right? Oh man, they're shutting the door up there. You know, just this little small range right here where these bodies are. That's where the tiny, tiny little supply is, right there, right now. So I hope they don't shut it down there. I hope maybe we can just physically break right through here. Maybe tap up into that 9 EMA. That would be a nice location because it's located at the body of those two candles, and the 9 EMA is there. That could be our resistance, but that would be a nice move to 44.54. That would be a good profit take up there. Okay, because that would turn into 50, 60 pips up there. Oh man, these sellers are tough right in here. And we're less than 4 minutes away from the futures market open. Unbelievable how they're holding it down right here. Now it comes down. Well, we get a shallow pullback. So we didn't hold our ignited open, but we got a shallow pullback. Our candle filled back up with nice big bullish volume. So let's see if we can just continue to break through here and just have even a nice impulse break would be welcome here. Let's just break through this and create a new high. And then if you want to reduce your risk going into futures, you're more than welcome. If you want to take some profit out, you're more than welcome. If you want to continue holding the trade, you're more than welcome. But you can still see where there's a lot of resistance. It's at this red line right here because that was the previous support earlier today. Volume closed below. You see how it's acting as that resistance right there. Man, what a wall established there. And look at it. It's trading at that psychological number, 44.50. Man, it's like a big block of transactions there. This is going to dictate how the futures market opens up. Will it be bullish or will it have that leg coming back down bearish? Let's go. Come on. Someone drop some Lambo lots right now. For all the big baller traders, drop some Lambos now on buys. We need Dave and Forex Borix and all of you guys to drop some big lots. I'm joking. It's a joke. It's a joke. We got to provide some entertainment while we're in a trade as well. There we go. Nice push. Okay, so I'm going to go to a break even. I'm at a break even now. I'm up 40 plus pips. I'm at break even. So I have no emotions. We were talking about controlling emotions psychologically. I have no emotions now. Now I got to trade in profit. I haven't secured anything. I might be getting a little greedy here, but the true neckline could be up here at this block, okay? But I have no risk. So you see, I placed the stop loss, but nothing was realized. Unrealized, didn't even hit drawdown on this trade, okay? But now I got to look at psychological numbers, because if it comes up like 50 pips right up there, maybe at 50, I got to do something. But however, if I'm still holding it and it closes above here, we've created a higher high. We could build off of this in the futures and get one more leg extending to the true block up here. Okay, maybe this is the true neckline. This is more of like an intermediate one here. But however, we should all be maybe at a break even right now. Okay, and it helps me on these calls as well, and it helps you guys as well. Let's see, maybe if we can target this area up here. That's a nasty wick. Okay, we broke through there. They just rejected it back down. So this momentum could open futures, and it's a big black candle coming all the way back down. But the reason why I'm at a break even is because it still could be selling pressure and break and then drop. And I don't want to now encounter a loss from profitable trade. The worst I'm going to give up is a break even. I'm okay with that. I'm okay mentally, financially, and psychologically. But I'm not okay with having a profitable trade go up 40 plus pips, and then now it's coming down to my stop loss of 40, 50 maybe, and that's a demoralizing trade psychologically. Then my next trade might be a revenge trade. I might get pissed off. I might not be following a plan on my next trade. I might just be trading on revenge, and then I throw everything out the window. So guys, there it is. There's that shooting star close. So we got to see if we can get a quick wick in here. That's it. I got stopped out at the break even. Oh shit. Fuck. They got me at the break even right there. Okay, but you see how it got rejected. It closed as a shooting star, ignited, and then they brought it right back down. So I went to a tight stop loss at a break even. It might continue to hold here. It might not, but I'm no longer in that. And you see, guys, I gave 40 pips to the market, but that's what I'm preventing, that big drop. So you see why sometimes it's good to place a break even, because now you remember where I had my stop loss? I had my stop loss down there, and you see how I would have lost capital now? So when I review this trade, my stupidity was I didn't close out 80% on that bar breaking right there. That was my only critique of myself on this trade. I was okay with my buy. I was okay where I originally placed my stop loss. I was okay when it broke there going to a break even, but I was not okay not taking out any money. So remember the liquidity down there? Remember that dollar sign I had down there? There was the break of liquidity. And did they do it at the futures market open? Nasty, nasty, nasty market makers. And I got to learn from this, okay? Just like you guys got to learn from your trades, I got to learn from this too. Where did I make a critical error and a mistake? On not taking out money. My own stupidity. I'm a trader and I didn't take out money. We were just talking about that. So you see how you can talk yourself out of your plan? You're literally watching me talk myself out of my trading plan, right? And you can see how I just left money on the table where I could have had it in my pocket. But there's now an example of where the better buy was. Remember I told you below that red line, right there, the break of that wick? And there's the liquidity. That's where originally I placed my stop loss. And then now it's coming right back up. Do I want to jump in now? You know, I have an urge to, but I don't want to just jump in. I want to wait for closure now. Conrad, you closed out 80%. Nice. But does this analysis help you guys? I know I feel bad that, you know, I left money on the table, but guys, that's why I keep reminding you guys, you know, take out some profit so you can start to see in your journaling and learn from the trades as well. You don't have to wait for me to tell you what to do, okay? When trades go up 30, 40, 50, 60, 70 pips, you know, that could be someone's daily goal, right? And then now this could be the true neckline up here, okay? Then maybe we see what they're doing, okay? Now we can see maybe a pattern coming down. We found the bottom right there. It could come back down, maybe a double bottom. It could just maybe continue selling back down tonight. But look at what the market does right, just before 8 p.m., or 7:55. Learn this stuff, guys. And then you see how it opened, ignited, it came down, okay? If you were waiting for a patient buy, that would have been your buy opportunity. It broke this red line. Look at where I placed the red wick. It was at 2:15 today. There was the break, liquidity grab, sweep of the liquidity, and now it's coming right back up. And now it's got this bigger upper block up here to break. Remember, the purple line was significant tonight. That was when we started analysis. That was the lowest point of the day. Now the volume is still below, so that is still now resistance. Could still be sellers pushing this thing down. Now we have a very aggressive candle. Okay, it's got a bigger range. It's the start of the futures market. It could continue to trade up and down in here. And then later tonight, what we're watching for is what will happen above this red zone and what will happen below this green zone. While it's inside here, we can let it accumulate. Even the daily candle is indecision right now. Look how high the wick is above. Look at the wick below. Look where the volume is. We're right here. We're trading almost right at the opening balance. Man, I feel so silly leaving the money on the table. But that's trading, guys, okay? So you're going to go through this as well. But I'm not getting angry. I'm not getting mad. I'm not revenge trading. I'm continuing to watch what's going on, okay? So learn from me. Learn from my mistakes, but also learn how I navigate the markets. You don't see me getting upset. You don't see me taking a revenge buy, taking an opposite sell right now. I'm remain composed. I'm still watching what's going on. I still see the volume is still trading in between this red block and this green block. So I know that that's consolidation. I can continue to stay disciplined and mark this zone right here and just say buyers are buying, sellers are selling. The market is accumulating. Ron can just continue to be patient and watch for something above here or watch for something below here. Because I know there was sellers there. I know there's buyers now. That big futures market liquidated a lot of orders. Will it continue moving up? Will we have a leg coming back down? Maybe I'll look to buy a second bottom. Maybe I'll look to sell up here. So you can still remain active in the markets by watching, but you don't have to just revenge trade. I see a lot of traders just, when they take a loss, boom, they get right back in. And then they're not studying what's going on. They're just mad and then they just take a trade in spite, right? So that's not a trading strategy. Any trader that does that, I don't know if they have a serious track record of being profitable by trading like that. Yes, they might get lucky from here from time to time. Like if I bought that candle too, maybe I would have got lucky, but I'm learning bad behavior. And if I continue to do that, the market will punish me. So just trade smart, guys. Always understand there's going to be another setup. There's going to be another opportunity. I have to constantly tell myself this every single day when I'm trading. There will be another setup. There will be another opportunity. Just don't get revenge. Don't trade mad because I know what that leads to. I know what that cycle is. I've gone through that just like you guys have. It leads to nothing. It leads to further losses. It leads to you not reading the market. It leads to you being upset, right? We don't want to do that as traders. This is a job, okay? We got to know that it's part of the job. If we make a mistake, it's part of our job, but we got to know how to handle that. Amanda, in that trade, what would you have secured? It was up 40 pips right there. When it hit 40 pips, it was my bad. I was just getting silly leading into the futures market. I know what I had to do. Remember, I said it hit my target but 40 pips, Amanda, what I would have been doing was 100% securing 80%, and then I would have left 20% running with break even. So then looking back at the trade, it's all hypothetical now. I didn't do it, but looking back, just like yesterday, I was happy that I took out my 80%. I was happy after the call, and then my 20% came back down and hit the break even. But at least I was happy that I secured money. So that was what I failed to do. When it came this bar right here, when it broke that red line. Remember I said to the red line, that was my plan to do something there, and it hit it, but I got greedy. I was looking for a little more, and then you see how they closed it down right near the close, and then they opened bearish ignited, and then they came down. Thankfully, I was at a break even. And I didn't suffer any loss, but this is another location, guys, where it's a good idea to look for buys. Okay, remember, see what they did. The futures broke that liquidity and grabbed it, and now look at what's going on, aftermath of it. So you can always be learning, guys. Yeah, I said it's snow black too. Wait, you said wait for liquidity. And you understand? Yeah, you see how you can tell yourself exactly what you're looking for, but then you talk yourself out of it. So that's a situation where greed got a hold of me there. I knew what I wanted right there, and I calculated it to 40 pips. But I didn't follow through. Okay, so we got to learn. Like I got to learn from that. I got to do better next time. But I didn't win. I didn't lose. So it's like I can learn from it, but it's easier to learn when you're not losing money. Had I kept my stop loss and I got stopped out, then I would be more upset because then I lost money with making a mistake. So that's the way the cookie crumbles. I can't make excuses. It is what it is. But I hope you guys are learning from my mistakes. So now we got a big bullish ignited candle following off of that. It's very bullish. Again, next zone to target. Remember this first bearish candle when we hit the highest point of the day, that was that big sell. So even if you're in sells, guys, remember what I told you, like the trades don't just run forever. Like Amrit took the sell right there at 4465 and look where it came down to, like a nice yellow line. That's 180, 200 pips down there. And then if you don't do anything, look how the market returns back up. That's demoralizing. If you had that sell there and you were up 200 pips and you don't do anything, look how the market can come all the way right back up. You know what I mean? So guys, I have pip and dip in my head. I don't know why I didn't do it there, and then if I wasn't in that trade, maybe I would have read the futures candle a little differently. If I was not in the trade, I would have seen that they spiked that. I maybe would have bought this candle right here and I would have been in the money. But sometimes when you just exit a trade, you hold off of taking another trade because you're looking back, you're learning what you did wrong, and sometimes you'll miss out, but it happens. Now what I got to do is just continue. Did you see what I did there? That bullish bar closed above. So remember, this was a red zone. See how now I flipped it green. And you see how it's kind of like the point of control of the volume? So sometimes you see what I mean? How the volume will close naturally, and it kind of represents a point of control where I don't even have to bring my Fibonacci tool and measure that candle from the open to the close, because there's the zone, the purple line. If it pulls back, that might be a good opportunity to look for maybe a pullback buy at 4.55. If it comes a little deeper, maybe that red line. If it comes down there, that could be the ultimate double bottom, because that's where the big move started at futures market. Now we're retracing back into this red zone right here. This was where I was, remember, looking originally to sell the market when it broke down. And did it come back up there? No, it went back down. Did it come up there? No, it went all the way down there. Now it's rotating all the way. And this is the first transaction back in this block. So let's see if the sellers are here, offering in here to push it back down. If it breaks through here, look how much closer we are to hitting the highest point of the day and maybe breaking out bullish again, okay? So now we're trading from this red zone to this green zone, coming back up to this red zone. So you see the bigger volume, the bigger pattern we're looking at now. So consider this one big short leg. Here's the leg coming right back up. Maybe that is the true neckline right there. Maybe it wants to come back down. Maybe that will be the higher low, and then it continues to break out. Maybe this breaks, and then look, the red line, if that doesn't hold, there's your double bottom. That could be another buying opportunity later tonight. And then there's the W where it could break, get a new daily high, pull back into this red to green zone right there, and we could be trending back up. Right? But if it pushes down here, then we could be coming down here. What if this doesn't hold? Then it breaks, closes below, and then gold is selling tonight. Okay? And just follow the volume at these levels. Okay, so now we're getting a bearish candle. Did we tap into that point of control? Technically, we have not. Okay, I can even zoom in. Like this one, I can see we technically traded in it. This one, we have not yet, okay? It came up there, but it's still a lower high pushing down, okay? Is it going to flag here in a consolidated? So do you see how I identify my consolidated areas? It's just the gray area in between my zones. That's how you figure out the consolidation area. It's very easy, okay? We've got a red box identified above. We have a green box identified below here. So anything in between here, if the volume continues blue, black, blue, we know we're flagging. And it could be a bull flag to continue to drive out. However, this is where sellers could be establishing their offers to continue to push this thing down. So as a buyer, if you bought and you're not really considering to take out any profit up there, you're basically making the mistake that I made, by getting greedy and wanting more. Because we have to know that this was a big bearish candle that started the big move down. So now we're finally retracing back up there, and you can still see how the sellers are still in that location. Amazing, Husky. You got 300 points. Congratulations, bro. That's amazing. Yeah, guys, when we used to scalp 10, 15 years ago, I was jumping up and down in this room when I got 10 pips because the volume was so small at that time. When I was getting 10 pips, I swear to God, guys, I was doing somersaults in behind here. Now I'm getting greedy when we're getting 40, 50 pip candles because I've seen last week there was 5-minute candles that were 100, 150 pips. So, I'm getting spoiled over here. So I got to go back to my appreciating 20, 30 pips. 3, 4, 5 of those trades a day, you're 100 plus pips. Yes, one goes astray, one makes a mistake, but you're not maybe leveraging, you're not risking. If you make 100 pips, you're not on the next trade, you're not risking 150. Maybe you're risking a tight stop loss. You're learning about entries. You're getting better at your entries. You're learning how to take trades and maybe realize minimal to zero drawdown. That's when you know when you're trading like a sniper. And that's when you know you're on top of your game in trading. It takes a little bit of experience to get there, and I know you guys are going to get there, okay? Now you see the daily candle. The daily candle is a spin top, like as if this was a 5-minute candle. It's got a lot of indecision. Okay, so maybe we're not like moving in a bullish direction on daily or bearish. Now we're just stuck right here again. So maybe we find this is the neckline where it needs to consolidate on the 5 minutes. Came up, back down. Maybe we'll go back up. Might be a double top, come down. Maybe we'll break back up here. But do you guys now start to see maybe the zones are a little bit more like you can identify them? That big leg coming down, that should visually be a bottom right there. Coming back up, this should be visually like kind of a top right now. And now we're revisiting this area, the opening balance of the bar. And we could come down right there to that yellow red line. That's a higher low, or the double bottom. But if it's still bear and that bearish candle keeps filling black, 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 we could break that wick. Maybe if it closes below there, there could be further selling pressure on gold later tonight, okay? Okay, so we're still transacting in this green zone. Now you see how the volume is above the 9 EMA. Leo, you were asking about the 9 EMA. So we currently have some volume above the 9 EMA. It's just telling us short term that there is a little bit of support. But you see the bigger purple bar, the purple line, that's the higher time frame one. That's the 200. So we're still below the 200. We're trading right at the 200 and right at the 9. When we trade kind of when they're right next to each other, this is where the market is kind of consolidating. And we can visually see that that's what it's doing right now. Okay, so maybe we got to wait. Maybe it will accumulate more. Maybe it's got another bullish leg that it wants to maybe try to break out of here. But we still have this big black bearish candle that maybe could close below here. And then I flip that green box red. And then we might still have more further selling pressure to come back down to where the big buyers position themselves when the market opened for futures. Okay, did anybody learn anything tonight? Learn to take some money out of the markets. Yes, that should be a lesson for all of us, including myself. Sometimes greed takes over. And it's funny, I just recorded a webinar for you guys that will be available Friday, and it was talking about fear, greed, and hope and prayer. And I feel ashamed that I didn't even follow, my plan. That's trading. It's a mental game. It's a psychological game that plays with you every single minute, every single 5 minutes. to be exact. Like when you trade on the 5-minute candles, every single 5-minute candle, you have that voice in your head telling you, should I buy? Should I sell? Should I wait? Is it consolidating? Do I take a profit? Where do I put my stop? All millions of questions go through your head all at once, okay? But that's why if you have a sound plan and what you're doing every single day, you follow it, okay? So now we're pushing back up, 90 seconds to go into the close. It's nice bullish candle. It makes it exciting that you want to take a buy. Sometimes it comes up, then it goes back down. So right now I know it's barcoding in here. Maybe I'll just wait for this physical bar to close, okay? Because it's still got some indecision in here. It's still building. Maybe the next one might be a bullish bar breaking out of here impulsively. So I still see how it held inside this green zone. It's still holding. Will it close above, inside, or below? We have 1 more minute to go. But you see when that was a big black candle coming down, it still held in the green zone. Remember, the size of the green zone was established earlier on. And that's how I trade off of these, is with the zones. Oh my God, Roxy, amazing. It's 3:17 a.m. This is your second Asia that you're attending. Love it. Learn so much. Good for you, Roxy. We appreciate you. I do a couple weeks of Tokyo, and then I go back to New York's with you guys. So I want to give the best of both sessions for the entire world, because I know for some people when I do New York's, it's their opposite like evening session. So when I go, then it's their morning. So I like to just go around the clock for everybody around the world. But we can also learn how volume moves in different sessions with different instruments and things like that. So, and then Dave is steady on New York's in the private Zoom with you guys. Okay, so here's the close. Are we getting kind of like a bullish pattern here closing? Okay, so it's holding. We're still inside this consolidated zone. We're still in between this red block and this green block. So we know that there's buyers, sellers, buyers. Will it continue to be a bull flag and break out of here? And maybe we can target the daily high. That could be a possibility. We know that it's 8:20 p.m. In 10 more minutes, we're going into 8:30, and that could represent a new 30-minute candle. Could maybe continue with the momentum or start selling back down. Okay, so it is continuing to build in here. It's a small kind of doji candle, thin volume. It's not one of these big body bars so far, but it's only the first minute. Okay, so it's still accumulating in here, and you see it's barcoding. Blue, black, blue, and then we're coming back down black. The indicator, this one, it's the SST daily bar indicator. We've custom made this one. We can attach a Fibonacci ratio on it as well, where you could trill the entire range, so you know where the volume is trading at 50% or the 618. That's also another handy tool that you can do with this daily bar indicator. So I don't have it on right now, but we can certainly do that. Like I can show you real quick. If I click on the settings right over here, see when you scroll down, see if I want to know exactly 0.5 of the entire range, level 3, here it is. So you see this yellow line. I'm not sure if you guys can see it. Sorry, it's an orange line right here, right there. So you can see how everything is kind of converging. It's right that 50% of the entire range is in the green block at the purple line and at the 9 EMA. So I'm getting a lot of confirmations there. That should be maybe signaling maybe a buy. Okay, I'm going to go in a buy, and I'm going to see if we can break this red block. I'm in a buy. I took a buy on gold to see if we can get above 44.60 and maybe attempt to target that daily high. Stop loss, where I'm going to place my stop loss, is giving it room to breathe. I'm going to give it room to breathe below. Normally, I'm just right below there, but I want to give it room in case it needs to come down and gather bigger buyers. I'm going to be below that red line, okay? And then I'm going to see if we can break the daily high and maybe get up to that red zone, right up to there, okay? So I'm looking for a continuation buy to see if the market can maybe continue to break out of here, maybe do something like this, okay? But I'm going to monitor this. If I see it come back down black, I might manually exit this trade prior to even it coming down to my stop loss, okay? So I'm going to just play this out. I'm in a buy now with 2 minutes to go and see if maybe we can carry some momentum going into 8:30 in the next 8 minutes here. So we're holding the purple line, which was the previous daily low, could be support, opening balance of the daily candle. We're above the 9 EMA. We're above 50% of the entire range of the candle. We're on top of the 200 EMA purple line is where we found our support. So all we got to do is kind of transact back into this red zone. We haven't came up here yet. So is this going to be the time where we transact in there? And if we can physically break through here, even an impulse, and close above, then maybe I can flip that red zone green, and maybe going into 8:30, we build off of it to target the daily high. But we got this mixed reaction candle, indecision, where it came down bearish, went back up bullish, coming back down. So we've got this spin top candle right in here. And we're still in this bull flag zone. And we got 1 more minute to go into the close, and then 5 more minutes. So what we can also do is look at the 30-minute time frames. We can see when the big drop happened at 7 p.m., it continued to 7:30. There was remember that 5-minute liquidity grab? That's what started the futures market, big bullish candle. So we already came and made the high, but can we close engulfed, right? Can we close with this bullish 30-minute candle engulfing this one? So maybe we can continue to build and fill the wick and get out here. But if we can't close strong, then it could be bearish coming down. So see now how they're pushing it up going into the close? Now we've got the close. Here's the open. Okay, so it came back up. We're still in this consolidated zone. Sorry, it looks very, very ugly in here with all of the, I don't know how to show this because it's lots of zones in here. Let's zoom in here. And there's the close. So this now is going to close our final 5 minutes going into 8:30. So we had that big push come back up, but now they're bringing it back down. So now I got to watch to see. We're transacting back inside this green zone again. Can it pick up a higher low wick? Can it hit some pending orders and go back up? Otherwise, it could continue to fill that wick and create a new low, okay? So that's why my stop loss, my maximum risk in this trade is below this red line and still protected by this big bullish candle that opened down here. So I'm looking to see maybe if we can continue to grab a wick inside here and bring it back up. And we got to see how it goes into the close. And the daily candle is still this mixed reaction candle, still trading right near the opening balance. Okay, so it depends who kind of wants to take the daily candle back up or down, depending, because we're trading virtually right at the opening position. Okay, so we found another wick, nice wick, coming right, rotating right back up, but we're still trading where it's blue, black, blue, black, blue. So we're still in this flag. Came back down. It did break some support, but it's coming back up. So we got to go into the close. Hopefully it can close strong, and maybe we take that momentum into our next 30-minute candle breaking through here. But opposite direction too. If the sellers close it down here going into the close, then the 30-minute could be a big bearish bar coming back down. Okay, so this is the battle now. This is the big fight going into the close, going into our next 30-minute candle. Unfortunately, I got caught in this sideways trading volume. We're not trending anymore. So this is the accumulation by both buyers and sellers. And one party is going to win, whoever accumulates more. So we did come back up, but you see it didn't kind of get above that body. It didn't fill the wick, so it is technically a lower high, and now the sellers are continuing to push it right back down. So this is the yo-yo game we're playing. It goes up, comes down, goes up, comes down, goes up, comes down. That's the accumulation phase in the markets. That's why ideally it's better to take buys and sells at these yellow lines, like at daily points of interest. I'm trying to take the buy back at the opening balance. It is a point of interest where the opening balance is. And I want to see if the opening balance can hold with buyers to continue to break through here and transact at the highest point of the day. So I got to continue to wait it out. I'm still in the trade. It's in a little bit of drawdown here with 2 more minutes to go into the close. And look at the daily candle. Man, that's an ugly looking daily candle. And then when that 30-minute candle closes, refer also to the 30-minute candle. So you can see the 30-minute candle. Will it engulf? Will it just be shy of engulfing? Will the volume continue to close below that purple line? Then the sellers are technically still in control. If this blue volume cannot close above that purple line, and then we're not, the buyers are not taking over the opening balance, and sellers are still in control, but not by a lot. Okay, very thin volume trading right at that opening balance. And this is when trading gets tough. It's this sideways shit. It's nice trading when there's a trend going down, nice move coming back up. But when we get into this where it's blue, black, blue, black, blue, this is where trading in a range is very, very difficult. And we got 40 more seconds to go into the close. So I pay attention right into the close of the candle because the last 30 seconds kind of dictates. You remember this one where it was bullish and in the last 30 seconds it came down bearish and it closed as that shooting started. Then the next candle opened bearish, ignited and dropped it. It was because of the momentum how that candle closed. So same with this one. It's got a lot of bearish volume. If it can close, the next one could be ignited bearish and continue come down. But I don't want it to break here and continue to drop all the way down here. So that's why my maximum risk is right below this red line support here. And here's the close in 5 seconds. Okay, so it closed right near the bottom of the green box. It's opened ignited bearish, black coming down, short wick. So it could easily come down black, take out that wick and drop further down. However, if the buyers are holding it, are they going to hold it with like an equal low support right there? It's highly unlikely, but if they can hold it here, then we'll see a blue candle being produced in here inside because we're still inside this green zone. But we're still trading at the bottom and we're rejected right now. So sellers could continue to push this thing down. And we've lost our opening balance right now. So we've got to see if we can develop some blue volume again to come back up. Okay, and when I look at the 30-minute candle, didn't get the close that I wanted. Okay, I would have rather liked the close to be above the purple line or engulf. Didn't get it, but let's take a look. We're still trading in the green block here. And we're right back at that opening position. So you can see this 4455. This is where that battle is between the buyers and sellers, opening position. We have a nice strong candle being produced here. But again, we got to create higher highs and we got to close convincingly with some engulfing volume, so we can build off of this for that leg to break through here. Because this does not help us where we come up and it's another lower high getting rejected back down. So, we got caught in this range. It sucks, but buyers are still here. But can they close convincingly strong? Again, they got rejected. So when I see like these multiple rejections, sometimes I talk myself out of still holding this trade because I see it came up blue, got rejected. It came back up, got rejected. So it could easily take out this red line and start to drop further down. And then that's where my stop loss is. Sometimes when I see this, I might just say, okay, I've had enough of this trade. The buyers are not showing me that the strength is there. And maybe sometimes I close a trade out prematurely as opposed to holding it to my stop loss. I don't know if some of you guys do trade like that, but if you don't, maybe consider, closing trades if you're not getting what you're looking out of the bars, okay? That was a nice big blue candle, but again, they rejected it and now it's shooting down. Where I know that maybe I should have closed the trade and then now I'm going to actually get stopped out. Okay. But that's where you're going to start to see that if the candle's not doing what you want it to do, you don't necessarily have to hit the whole trade to your stop loss. But this one, I placed it right there. I manage my risk. If it goes down, I get clocked out there. Okay. I'll verbally let you guys know as soon as I get tapped out here. My stop loss is just below that 44.50. Okay, I got tapped out right there. Yeah, so sellers, it's trading inside this zone. So overall, you know what I mean? It's trading down, back up. There's the true neckline tonight, coming back down. So it could trade back here. It could continue to push down. Could be a double bottom right there. And then you're just trading in this range where it's going up, could be coming back down, you know. So what I like to do if I was going to continue to trade, I would be targeting this yellow line up to there. Then I know it's a big move from down there, 130 pips. I could go halfway to about 60, 70. And if you're buying from there and it comes up there, grab your money, get out. If it comes back down there, grab your money. If you're selling, get out because it could come back up. But yeah, guys, I made just a couple mistakes today. On today's trading. I'm not very happy with my trading tonight. Maybe it stemmed off from that first trade, and but that's the way it goes. Guys, that's it for me. I'm out. I got to finish this call right now, and we'll see you guys tomorrow. You can join Dave in the New York sessions, and I will be back tomorrow. We'll do Thursday Tokyo session, and we'll see how the markets move tomorrow. Amanda, you didn't stick to your plan either. It happens. I didn't stick to my plan today. So I got to stick to my plans on these calls, guys. I have to because it not only affects me, but it affects you guys too. So I'm going to maybe write some rules like a legend. If we go up maybe 40 pips, I'm going to have rules stated that I'm going to be following my 80-20 rules as I trade because sometimes when I don't follow those rules, you guys can see what happens. And trading is all about following rules, and sometimes it's tough when you don't follow your own rules. And then the markets punish you. But guys, you know, I apologize. Rough session, and tomorrow we'll be back stronger, and we'll see you guys tomorrow, okay? Have a good day, everyone. Thank you guys very much. If you guys can leave us a like, subscribe to the channel, we do appreciate it. And also, if you guys can join Dave tomorrow and support Dave in his sessions in New York, and then we'll be back for some Tokyos tomorrow. Okay, guys? And I got to rewatch my webinar that I'm posting this week on the greed, how to overcome greed, because that's what caused me to make some critical mistakes today. Okay, guys. I hope you guys caught some tips, and hopefully you guys are following your plan, not like me. Okay, but guys, I do appreciate you guys. Have a good night, and we'll see you guys tomorrow. Thank you guys so much. Have a good night, guys.
Recording stopped.
Hey guys, good morning. Welcome to the live session of Stocks Never Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.